Hi and welcome to our analysis of ASK Automotive Ltd, a leading player in the auto ancillary industry. ASK Automotive is a manufacturer of advanced braking systems, aluminum lightweight precision solutions and safety control cables. For more than 3 decades, they have been supplying safety systems and critical engineering solutions. In this video, we will delve into the industry overview, ASK Automotive's product segments, revenue segments, shareholding, management, cost structure, financials, management outlook and capex for the future and the strengths and weaknesses of the company. Let's get started on the stock analysis of ASK Automotive Ltd. But before that, let me introduce ourselves. We are PA Wealth, an investment services group. We offer stocks PMS, mutual funds, alternative investment funds, insurance, and startup investments. Every week, we upload research videos on different companies, mutual funds, and financial topics. Stay ahead of the curve with the latest trends and insights by subscribing to our channel and clicking the bell icon to get notified about potential multi-bagger stocks. Let us provide a brief introduction to ASK Automotive. Incorporated in 1988, ASK Automotive Ltd is a manufacturer of brake shoe and advanced braking systems for two-wheelers in India with a market share of approximately 50% in fiscal 2023 in terms of production volume for original equipment manufacturers and the branded independent aftermarket, on a combined basis. Their offerings are powertrain agnostic, catering to electric vehicle as well as internal combustion engine OEMs. Let's take an overview of the automotive industry. The global two-wheeler market is projected to grow at a CAGR of 7.2% during the forecast period of 2024 to 2032. Sales of electric models surged by 30%, capturing 15% of the market share. The automobile industry is one of the primary drivers of the Indian economy, accounting for 35% of the manufacturing GDP and 6% of the Indian GDP. Now, let's look at the product segments of ASK Automotive. First, advanced braking systems. The company dominates the Indian two-wheeler market for advanced braking systems, holding an approximate 50% share. It manufactures brake shoes, disc brake pads, and brake panel assemblies, which are crucial for vehicle safety and performance. Second, aluminum lightweighting precision solutions. The company specializes in die casting, critical machining, paint shop operations, and critical assemblies for both automotive and non-automotive applications. The ALP solutions cater to various industries, including BAVs, internal combustion engine vehicles, and non-automotive sectors such as power tools and outdoor equipment. Third, safety control cables. The company offers a range of control cables, including front and rear brake cables, throttle cables, speedometer cables, seat lock cables, fuel lead cables, temperature controller cables, and choke cables, specifically catering to two-wheeler OEMs. Fourth, wheel assembly. The wheel assembly service lines follow customers' instructions and specifications in assembling components supplied by the customers and or the vendors. The company provides wheel assembly services to certain two-wheeler OEMs in India. Fifth, others. Others segment include the revenue from scrap, dies and other unallocable sales. Now, let's discuss the revenue segments of ASK Automotive. Aluminum lightweighting precision solutions is the largest segment of the company's revenue, accounting for 45.3% for Q1 of financial year 2025. This is followed by the advanced braking systems segment, which accounts for 36.3% of the total revenue. Wheel assembly accounting for 11.8% and safety control cables accounting for 3.6% of the revenue. At last, other segment accounts for the remaining 3% of the revenue. Now, let's look at the management of ASK Automotive. Mr. Kuldeep Singh Rathi is the chairman and managing director of ASK Automotive Ltd. He is also one of the promoters and a founder of the company. He holds a bachelor's degree in arts from St. Stephen's College, University of Delhi, New Delhi. He has more than 35 years of experience in the manufacturing sector. Mr. Prashant Rathi is a whole-time executive director of ASK Automotive Ltd. He holds a bachelor's degree in commerce from University of Delhi, New Delhi. He is currently responsible for the operations vertical of the company and has more than 24 years of experience in the manufacturing sector. Mr. Aman Rathi is a whole-time executive director of ASK Automotive Ltd. He holds a bachelor's degree in science, engineering, and a master's degree in business administration from Purdue University, West Lafayette, Indiana, USA. He has more than 22 years of experience in the manufacturing sector. Let's take a look at the shareholding of ASK Automotive. The promoters are the largest shareholders of ASK Automotive with a holding of 85%. Mutual funds hold 2.02% of the shares. Foreign institutional investors hold 4.92% of the shares. The public holds 5.88% of the shares. Other institutions include several investors, such as banks and insurance companies. They hold 2.18% of the shares. Let's look at the cost structure of ASK Automotive. The cost of raw materials is the largest component of ASK Automotive's cost structure, accounting for 69% of the net sales. Employee cost account for 6%. Other manufacturing expenses account for 10% of the net sales. Power and fuel cost account for 4%. Selling and admin expenses account for 3% of the net sales. Now, let's focus on the financials of ASK Automotive. The company's net sales have grown steadily from 1,785 crores in the financial year 2019 to 2,995 crores in the financial year 2024 at a CAGR of 5.31%. The company's profit after tax has also grown steadily from 121 crores in the financial year 2019 to 174 crores in the financial year 2024 at a CAGR of 3.70%. At last, the company's return on equity has decreased from 28.60% in the financial year 2019 to 21.30% in the financial year 2024. Let's now turn to the management commentaries to get a better understanding of the company's performance. In Q1 of financial year 2025, ASK Automotive delivered a growth of 31% in revenue, 59% in EBITDA, 63% in profit after tax, and outperformed the two-wheeler industry growth on year-on-year basis. The company achieved an EBITDA margin of 11.9% in Q1 of financial year 2025. ABS delivered 26% year-on-year growth, ALPS accounted a growth of 39%, whereas SCC posted a growth of 33% in Q1 of financial year 2025. ASK Automotive aims to seize export opportunities by introducing high-quality products to automotive and non-automotive customers in the US and European markets. The company is hoping that the exports contribute 10% of the total revenue over a period of 5 years. The company is currently focused on capitalizing on the growing adoption of EVs in India by prioritizing lightweighting and thermal management to reduce carbon emissions. To meet future demand, the company is strengthening its production capacities and capabilities. It has established its 18th manufacturing facility in Karnataka to serve southern customers in India. Through its technical collaboration, from Taiwan, the company is producing and selling safety control cables to two-wheeler OEMs and to independent aftermarket customers through their distribution network of 400+ dealers across India. In April 2024, ASK Automotive signed a strategic joint venture agreement with the AISIN Group to market and sell auto components in the independent aftermarket for passenger car products. The company will own 51% of the shareholding in the JV company. The company has entered into a new strategic partnership for high-pressure die-casted alloy wheels for two-wheelers, receiving technical assistance from LIOHO Machine Works Limited of Taiwan. The company is planning to launch products under the AISIN and ASK brands by Q4 of financial year 2025, and the Karoli plant has come to almost 40% capacity utilization. Now, let's talk about the company's capex. The board of directors of the company has approved an investment of 20,000 lakh rupees for setting up of their 18th plant in Bengaluru, Karnataka, under their wholly owned subsidiary, ASK Automobiles Private Limited. ASK Automotive has commissioned a state-of-the-art mega manufacturing facility with an investment of approximately 38,000 lakh rupees by March 31, 2024, in Karoli, Rajasthan. Capex spent for Q1 of financial year 2025 was at 80 crore rupees, including investment of 35 crore rupees in the upcoming solar plant in Sirsa, Haryana. The company expects a capex amount of 250 rupees to 300 crore rupees for the whole year. Let's take a look at the strengths and weaknesses of the company. Strengths: strong market position in the two-wheeler components industry. The ASK Group is a prominent player in the two-wheeler friction materials segment and caters to most of the renowned OEMs in India, including Hero MotoCorp Ltd, Honda Motorcycle and Scooter India Private Limited, Yamaha Motors India, TVS Motors Company Limited, Suzuki Motorcycle India Private Limited, and Bajaj Auto Limited. It has presence in the overseas markets and aftermarket segment, and diversified product mix including brake shoes, aluminium die castings, panel assemblies, support the market position. Robust financial risk profile. The financial risk profile has improved consistently because of steady repayment of debt backed by sufficient reserve, and reduced reliance on bank lines on account of prudent working capital management. Weaknesses. Limited track record of sustained improvement in operating profitability. Operating profitability for the ASK Group has fluctuated between 10% and 12% over the past 4 years. However, with new units being set up, improved profitability is expected due to reduced logistics costs and better cost absorption as operations ramp up. That's all for today. I hope you found this video helpful. If so, please give it a like and subscribe to our channel for more research-based financial content and click the bell icon for potential multi-bagger stocks. In the comments below, let us know what topics you'd like us to cover in future videos. Thanks for watching.